The following program has been pre-recorded and is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hi, I'm Esther Gulius, the tax lady from EG Tax with Tiffany Fabian, Christopher Fabian, and we're going to make sure that we keep everybody in Western New York and Southern Ontario and anyone that's listening to us abreast on how to make sure that they don't overpay their taxes in this complicated world of taxation. And of course, I'm joined like every weekend with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. How are you doing?
Good. And Christopher.
Hello, Esther.
Hello, guys. All right, so first thing I want to tell everybody is that officially the IRS has not said when they're going to open their doors to accept tax returns. We're thinking it'll be probably the weekend of around January the 20th, but that would not stop you if you wanted to start your returns right now, because we can get them stacked up, and so as soon as the IRS is open up, we'll send them electronically. We wanted to make sure that you know that our offices are going to open up the week of January the 15th, 16th, 17th, depending upon when the IRS opens up. But of course, if you need to make your appointment, you can always call us at 632-7886 or go to our website at egtax.com and you can make your appointments, right?
Yep. I walked into the office today and Tammy said, "Oh, I heard Esther might be getting a puppy." So anyways, that's the buzz around the office. Buzz.
We'll see. You're going to train it, right?
Right.
Yeah.
So,
And the puppy's name's going to be Credit.
I just said that to Gracie. I go, "Oh my God, I just got all new area rugs. Then the dog is not potty trained." Oh my gosh.
Well, that's you said you're going to do it, so okay. All right. Wanted to let everybody know that we can prepare your return, with all the COVID stuff. You can come in person, and you can be rest assured that we're going to use safety measures, number one. You can go to our website and set up a virtual appointment through a secure, and set up a secure account, and we'll prepare your return virtually. Or you can drop it off, or if you'd like, another service that we're offering this year is that we can get you a secure pouch that's going to be registered with the United States Post Office. We'll pick up your stuff and you can send it to us, and we'll do it that way too. So any way you need it done, we can do it for you.
Exactly.
Right?
Yeah. It's just,
if you can think of a way, we can do it.
Now is the time for remote and distance everything. And so you sort of have to overcome the hurdles of what we're dealing with, right?
That's right. And so, the bottom line is you want to make sure that you don't rush in, because many people have gotten the advanced child tax credit, and there's things that you're going to get from the federal government that's going to tell you how much they sent to you in advance. Really important, because if you do your tax return without taking that into consideration, you'll make a mistake.
Correct. Yeah,
Right?
and there's the forms you want to wait for, because my gosh, people rushed and did some tax returns and they didn't know how much their stimulus was. And I would say those people had to wait another extra 4 to 5 months because they didn't put the right amount for the
There's
stimulus.
still people waiting for their
Yeah,
refund.
so make sure you have your I's dotted and your T's crossed.
That's right. And so it's great if you think that you got your tax return in early, but if it isn't done correctly, they're not going to process it, which can add months onto processing.
I know.
So you want to make sure that you know what you're doing, and what you do, you put as accurate of information in as possible.
Our district manager texted us the other day. She got the form about her child tax credit.
Right, the 6419 or
which is really
69.
important. So don't throw out that form,
Yeah.
because we need it.
They're on the way,
And-
or they're already in your mailbox.
Right, because that figure on that letter has to match your tax return.
Right, and so there has to be an adjustment made on your tax return. Other thing we want to let you know is that we have, EG Tax Corporate has now taken over our Derby, Hamburg, Springville, Warsaw, Batavia, East Aurora, Alden, and Lewiston offices, and those have all been moved slightly. I'm going to be calling everybody on Sunday night and let them know where the new address address is and what the new phone number is to let everybody know. And of course, our Orchard Park office we also took over. So that's a good change. And then the important thing is who should file. And I think this is really important because a lot of people that have not had to file a tax return want to. I think, didn't you guys do a tax return yesterday?
Yeah, I was going to say, for those people, like you said, who normally don't file, but they have children, they're going to want to, and they're going to want to turn their volume up on this one and listen to this.
All right, so didn't we just do a tax return yesterday and
right,
somebody
that's
got a
what
$10,000 refund?
That's what I was getting to. We had somebody come in, 2 children, doesn't work, no income at all, and they are getting a refund of $10,200.
Wow.
And so that's remarkable. So if you're somebody that in the past never filed because you didn't have to file, you didn't have the income, if you have children, you want to make sure that you, especially children under the age of 18, you want to make sure that you file your return because you have a refundable credit coming for children between the ages of 6 and 18 of $3,000 a child, and for any other children under the age of 6 is $3,600, and it's a refundable credit. And yes, they're going to pay you back. And if last year you didn't get your stimulus money, you get that too.
Yeah,
right?
Absolutely. Right? There was a $1,400 that was the third stimulus, and so we're reconciling that on the 2021 return.
Right. So if you didn't get stimulus, you can get stimulus now, the $1,400. So who should file? If your income is low and you worked, you might get an earned income credit. That's another change. And so especially for seniors who might be working maybe at a golf course or something in the summer and they're picking up odd jobs, they never would have qualified before being over the age of 65 for the earned income credit, but this year they would qualify.
Right. Or if there's a high school graduate who didn't go to college and they're working a part-time job, they could qualify now for earned income credit.
For earned income credit, right.
Correct.
So don't assume, oh, I don't have to file, I didn't make enough. If you don't have much income, you're somebody that they absolutely targeted to give money to.
Yep. Very exciting.
So you would just lose it if you didn't file. So that's number one. Who else should file? If you didn't receive any or all of those stimulus monies, remember they sent out the $1,200, the $600, and the $1,400?
Yep.
Well, if you didn't get it because you hadn't been filing returns, you can get it.
Yeah, and that was money that's on the table, and don't leave it on the table. You guys deserve that, and so that can be something that we can get. So
stimulus money you didn't get, you should file to get that. Let's see. If you work and have children that are living in your home, really important because then you would get that child tax credit that we just talked about, and potentially the earned income credit as well. And again, we have to reconcile if they gave it to you in advance, how much you got against what you're entitled to when you file your tax return. So again, that's something that you want to watch out for. So people with children that are living in their home under the age of 18, and if they have wages, you are looking at the earned income credit. If you have no income, no wages, you could still get the child tax credit. And you'd also get this child tax credit on the state of New York as well, right?
Right.
It's not as big.
No.
It's money.
Yeah, it's $100 to $330 per child.
Right, and that's I'll take $330 a child, right?
Definitely.
Absolutely.
And then who else should file? If you paid a daycare provider in order for you to work, then there's now this refundable daycare credit, which nobody's really talking about. Have you heard much about this?
No chatter at all.
I'm so surprised. It's a refundable credit up to $4,000 if you have one child, $8,000 if you have 2 or more children. That's they're sending you the money back.
Right. It used to be what Tiff called a Pac-Man credit, where it only ate your tax liability, and now it's an Energizer Bunny credit, where they give it back to you.
And the state of New York gets a refundable credit as well.
Yep.
And even if you paid a family member. So I'm going to talk about that on the other side of the break. I'm Esther Gullius, the tax lady from EG Tax. We're here to help you. I'm going to take a short break. We'll be back on the other side. Hi, I'm Esther Gullius, the tax lady from EG Tax with Tiffany Fabian, Christopher Fabian, and we're really just like we're just like chewing up the tax law changes, and I want to make sure you get those. But we're also going to answer some of your emails. But I wanted to finish this with the daycare credit. If you paid a family member, mom and dad, to watch your kids so you could work, and many times what happens is, what do the taxpayers say? I don't want to claim it. I don't want my mom and dad are all money. How should they handle that this year?
Oh my gosh, they should make sure that they claim the Child Independent Care Credit on Form 2441. So that would mean that in your example, mom and dad have to claim it as income on their return. But don't forget, there's so many expenses. There's driving the kids to different places. There's meals for the kids.
The office
toys,
and home.
entertainment.
And then on the flip side, maybe the parents will make some income, and so this year it leaves them open to the possibility of earned income credit.
All right, so so let's unpack that. So we got, let's say you give mom and dad $800 a month, $200 a week. So they get $9,600. And so they go, oh my gosh, I don't want to claim it. But then they reduce that by all the expenses that take care of their grandkids. And so let's say that they're left with $4,000 self-employment tax. So they'd have to pay about $600 in FICA. However, they would qualify potentially for an earned income credit, which would offset that. So mom and dad would end up with no liability. The kids who had paid around $10,000 could get a $5,000 credit if it's for 2 or more children, $4,000 if it's for 1. And so think about it. It's a win-win-win situation.
Right, and even the not the grandparents, the regular parents, could pay the grandparents' tax liability
if there were any,
there were any, and still be up a lot more money than they were.
And I can't tell you, I'm sure you guys agree. I talk to so many clients, and they're like, my wife or my husband is sitting it out, and he's not working because childcare costs so much, and it's cost prohibitive. So this sort of opens a door for those people who decided they aren't going to work, and the market really could use people working.
Oh
right
my
now.
gosh, we want everybody to go back to work.
Yeah.
But here's the thing. It is definitely more complicated. I can't tell you that it isn't. But if somebody came up to you and said, give me $4,000 of your money, you would be really upset about that. Well, when you let the IRS keep $4,000 of your money because you don't want to complicate your situation, first of all, it's not that complicated, but definitely grandma and grandpa, if they're your daycare provider, after they take their expenses, they shouldn't owe very much money. If they do and you pay it, you still might come out $5,000-$6,000 ahead of the game, and that's the name of the game, right?
That's the name of the game.
All right, and by the way, this week we are not taking calls because we try to pick out those emails that we thought we could get you better adjusted to the changes in the tax law. And so why don't we go to one of our emails right now?
Yeah. Sorry, I've got Darlene from Buffalo. Oh my gosh.
Sister-in-law moved into my house last February, because she lost her job due to COVID. She got unemployment in 2020, but it stopped in February. So that's why she moved in with me. She's 59 years old and can't find work. And I have supported her all of 2021, except for January. I wonder, can I claim her? I didn't in 2020 because of her unemployment.
Wow, it sounds like it.
There's the first thing would be gross income. If she didn't have gross income like over $3,800, and that 1 month of unemployment can't be over $3,800, right? So she has no
not
gross
even with all their
taxable
bonus.
income. The second is support. Did you give her 50% of her total support? And if she's living in your home and she had no income, it sounds like you did.
Right.
She's not filing a joint return. She's a citizen of the United States, and she lives in your home. So she should be your dependent.
Yeah.
And so that'll get you an extra $500 credit.
And the filing status.
Actually, right. She could almost be head of household.
And she would be head of household.
So
which would make it
ding,
even
ding,
more
ding,
money.
ding,
Right.
ding.
So that would really. So you get head of household, federal and state, and the extra credit on the federal return. So yes, but before you do that, make sure you give us a call so we can make sure that there wasn't some other income that you're not thinking of. Maybe she didn't tell you about a pension plan she's got.
Yeah.
But and like anything, double check to make sure
Yeah.
that you heard it correctly. Don't just say, I heard it on the radio.
Right. And then there's all those other layers, too. I mean, maybe she's getting Medicaid. And so if you claimed her, it might preclude her from getting Medicaid. Maybe she's getting food stamps. And so there's really all those other layers. And
Right,
so,
because the support test would be the question.
yep. And so when you're doing taxes, well, just like when you're doing anything, you got to look at the whole picture.
Absolutely.
And then I've got another question from Tom from Williamsville. I just turned 72 in November. I forgot to do my required minimum distribution. It's nearly $25,000. What can I do?
Okay, well, since he just turned 72, he can double dip this year in 2022, right?
Right.
Yep.
So he has till April the 1st to take out his first distribution that was really due last year, and then he has to double dip and take a second distribution before December the 31st to avoid the penalty. If he doesn't, how much of a penalty will he have?
It's a 50% penalty so that's $12,500.
Right. So you
that's
wanna make sure you do
exorbitant.
that.
Yeah, it's a very large penalty.
And his first distribution would be using the old tables, the 2021 tables.
Good point.
And his second distribution of the year would be using the new distribution tables for 2022. So it's going to be a little bit confusing.
Right. But I'm assuming his bank would be or financial institution would be able to help him. Or you can call EG Tax, and we have all those actuarial tables as well.
Right.
Yeah, and then don't forget when you're in this situation to plan, because you want to make sure you have your withholdings correct, and so you're not left holding the bag and having a penalty and things like that.
Because that's a substantial required minimum distribution.
It is. It's
Remember,
gonna make-
once you're 72, you have to start withholding in the year you turn 72 from your annuities, your IRAs, if you haven't been withdrawing, and they penalize you if you don't. So that's what we're talking about right now. What else we have here?
Kevin from Cambria writes, tax team at EG Tax. So, regrettably, my mom passed away, and she had all this Native American jewelry that she bought or was gifted to her. She basically collected it. I don't have much use for hundreds of pieces of jewelry. Therefore, if I sell it on eBay, am I going to experience a large tax burden? I don't know which way to go. Please advise.
Okay, so if he sells it on eBay, what happens?
Goes on a Schedule C, and so, but he gets a stepped-up basis because he inherited the jewelry, and so
You think, Chris, it would be on a C or a D?
Well,
I've asked you guys this before, and you've told me C.
I would almost say a C, because
You
eBay,
think
depending.
he's doing this as a business,
Well, if
or is he just selling collectibles?
well, I mean, with it,
It depends if he sells other stuff on eBay, wouldn't you say?
that could be it too. Yep. But I mean, eBay, depending on how many sales he has and how much he's going to get a 1099K from them, which will trigger a Schedule C.
That's true, but true. So if he's in the business, if he's making this a business to sell the jewelry, then it's a Schedule C. But if he just goes and sells it to like
If it's a
what
one
kind of a
trick,
shop is that?
a pawn shop,
A pawn shop or some kind of collectible shop, then it would go on a Schedule D. So it all would depend on the way that the taxpayer is handling it. So what I'd suggest you do is give us a call so that we can kind of point you in the right direction. On one, you'll end up paying FICA, and on the other, you would pay at a higher rate of the sale of a collectible asset.
depending, he should first
But he'd get a stepped-up basis, so he needs to
Right.
get an appraisal.
That's what I was going to say.
Yeah.
His first step is to get an appraisal of each piece separately.
Because of the stepped-up basis,
Yep.
because it was inherited property.
Okay, what else we got?
We've got Gordon from Amherst. My son worked in Pennsylvania this summer and made $7,000. They only took out Pennsylvania taxes and no New York taxes. He is a college student working on his doctorate. He only made $7,000. Does he have to file? By the way, he's 23.
Okay, so if obviously he's already done his 4 years undergrad, because he's a doctor, it sounds like. And so the only thing that would be available would in his tax return would be lifetime learning credit. So this kid doesn't have to file, but he can certainly be claimed on his parents' return.
Which
right?
would mean then he would have to file New York.
Right, but he has to file a New York return.
Yep, and he's
right?
going
so
to
he's
get
going
a
to do
credit,
a
112R.
He'll do a 112R for New York State for the taxes paid to the other jurisdiction, which will then be a credit on the New York State return to mitigate his liability on New York State.
Correct.
Right?
Correct.
Yeah, so you first got to look, Gordon, are you claiming him or not? Because if you're not claiming him, there's going to be, well, if you're not claiming him, he's now eligible for, well, he's a full-time student, so he won't get the EIC.
Right.
So, unfortunately, that. But he would get a refundable college credit on the New York State return. No,
Now-
he would not. It's doctorate.
Right.
Not the first 4 years.
Yeah.
And now, to play the devil's advocate, if he was 1 year older, Gordon, you couldn't claim him because you can claim your kids up to the age of 24.
Right.
And so if he's over 24 and he makes over like $4,000, you can't claim him. But since
But
he's
of
23,
course, this year we're talking about that foreign income earned in another jurisdiction.
Yeah.
So he's going to do a 112R to get a credit for taxes paid to that other jurisdiction. He has to do the tax return for that jurisdiction to get the refund back, assuming he has a refund. And then on New York State, you get a full credit for any taxes paid to, I think it was Ohio, right?
Pennsylvania.
Pennsylvania.
Close enough.
yeah.
So, and that happens a lot where your kids are working in Massachusetts, in Ohio.
When they're
and
going
so
to
you have
school.
to do the
Yep.
112R to get that credit on your New York State return. Yes, it is still taxable to New York State because if he's still a New York State resident because he lives in your home when he isn't in college, then he's going to have to pay taxes in Pennsylvania and pay taxes in New York, but he gets a credit for the taxes paid in Pennsylvania.
That's right. Yeah, and the break is in like 10 seconds, but there's two questions that tie together when we come back, so I was
All
going
right,
to ask
so
those together.
I'm Esther Golias, the tax lady. All of our offices are going to open the week of the 15th. We're really thinking, well, it'll be because we're waiting for the IRS to make the move when they're going to be opened up. But in the meantime, you can make your appointments by calling our office at 632-7886 or go to our website at egtax.com. We're going to take a short break for the news, and we'll be right back. Hi, I'm Esther Golias, the tax lady from EG Tax. Well, tax season is starting to get underway. We want to make sure that we get you the best information so that your refund isn't held up. And we want to make sure that with all the money that's out there, all these refundable credits, we want to make sure that you get what you're entitled to. And I'm joined in studio again with Tiffany Fabian, Christopher Fabian, and we were talking before the break about something with two questions that got emailed in that are unique.
Yeah,
right?
well, they started tying together. Cleve from Wheatfield and Beth from Batavia. Cleve writes, I like to prepare my own taxes and even do it on paper. Can you tell me why they want me to file electronic? Isn't it my right to do what I want? And then the second one, Beth from Batavia, says, tax lady, I filed my taxes late for tax season 2021, and there was a problem with my ex-husband claiming one of my children that he shouldn't have. So my accountant had to send it paper. I'm still waiting on my return. I also had unemployment, and won't I get the rebate? I'm still waiting. Beth from Batavia and Cleve.
Okay, well, first of all, what does the IRS in the state of New York say about filing paper returns?
It's illegal.
You can't do it.
Unless there's an exception.
Unless
Right.
there's...
And so Beth is the one with the exception, right?
Right. She
Because
was
they
filing
wouldn't
late.
accept her return electronically because her child, her dependent was claimed by somebody else. And so there was no option for her. But our first gentleman who loves to do it by hand, that may be the case, but you still have to do it electronically. That's the law. It's like somebody saying, well, why can't I go in the supermarket and rob the store? I
Right.
like to rob the store. Well, you go to jail for that. Well, they used to go to jail, although now they're saying you can kind of steal. But okay, well, we won't even go there. But and that's true. You know that they're
I know.
they're liberalizing what is
what you
theft
can
now.
steal. Yeah.
But that was my example. But I mean, the law is the law, and you have to send it in electronically. That's the law, and without an exception, you can be penalized, and we don't want that to happen. But they're certainly penalizing you because they won't process the return till like everything else is done.
Yeah.
So you're
absolutely.
really shooting yourself in the foot.
Yeah, just like Beth, she's still waiting and waiting. But I want to say to Beth, if she filed her return late, already in that there was already in a means when you filed after like the end of February for the unemployment, they were already subtracting $10,200. So that was already done on that return that was sent late. So you don't have to worry about any rebate coming from unemployment. It was already calculated because you sent your return late. Prior to the end of February, you had to make a justification for it, but you shouldn't have to. So you're just waiting on your return. And if you want to, you can give me a buzz at 632-7886, and I could call the practitioner line.
Yeah, before we start to get really busy, if you're having those kind of issues, like you're still waiting and waiting and waiting, you can call us at 632-7886, and we'll contact the federal government for you to ask exactly what stage of processing it's in. You might find out that they say they never got it.
Yeah, and then I also
If it's a paper return, you don't know if they got it.
And then I also want to say for 2021, you should try to file as soon as you can, because unfortunately, the first one to the well, even though your ex-husband shouldn't have claimed your son or daughter, it was done. And so now the IRS has got to fight it out and ask for proof, and this just prolongs everything. And so you should try to file your return as soon as you can so you can preclude this from happening again, or try to.
But you really do have to make sure that what you're putting down is correct, because if you aren't adjusting for that advance money that was sent with the child tax credit, you can be filing quicker, but it doesn't mean that they're going to process the return. So you want to make sure you do everything properly so you don't slow it all up too, because that's the other side of it, right?
It is.
Yep.
Okay, who else we got here?
Morgan from Cheektowaga says, tax lady and crew, I haven't filed my taxes for years because I only had Social Security and child support. My kids are 12, 15, and 18, so I've been hearing a lot now. Should I file again now?
She should be dancing in the street, I'll tell you, because she's going to get a gigantic refund. It sounds like maybe because she hasn't filed, I bet you she never even got the advance. And who knows if she got the stimulus money.
Right.
So this lady could be really, really happy.
It was like that lady
how
you
much
talked
money are
about
we
yesterday.
talking about that she could
Well,
get in
the
refund?
18-year-old she can't get the child tax credit for, but the 12 and 15-year-old she can. That's $3,000 a child, so that's $6,000 from the federal, $100 each on the state, so that's another $200. So right there's that's $6,200. If she never got the stimulus, that's $1,400 apiece for all four.
Oh, my gosh.
So 14 times 4 is $5,600.
Right.
So for the federal, she's looking at $11,600 for this
Right,
year.
and if she never got the 12 and the 6,
Yeah, she can go back and do a 2020.
Right.
And
I
then
mean,
don't forget
this-
New York.
she could be looking at like $15,000 in refunds.
Yeah, and New York, she's going to get like $150 a kid.
100.
100 for the Empire State times 3 years.
Yeah.
And so she's
2 times, 200 apiece for 3
Yep.
years. Well, actually, the 18-year-old, one of the years was
Right. She
16,
would have
so that would have been
qualified.
300.
So the thing is, should you file only if you want $15,000?
yes.
You know what I mean?
Yep.
The whatever used to be back in the days when people paid taxes, now so much of our job is getting people refunds.
Right.
Right?
Yep.
Okay. What else we got?
I got Esther. I just started a new retail business with my brother. He says we should do a partnership. I said we should do a corporation. What is best for tax purposes? Tammy and Chuck.
Oh.
Well, it really comes down to, I mean, it's almost 6 of one, half dozen of the other. It depends if they're doing a limited liability partnership.
Yeah. Well, if it's a retail business and people are coming into the store,
Right, that makes you want to do a limited liability.
definitely do at least an LLC.
Right.
You know, but then here your net profit of an LLC as a partnership is subject to self-employment tax.
But then again, you have to take a reasonable salary, and so you're still paying FICA.
Right, but if you pay yourselves, like if your net profit's $50,000 and you each take paychecks for $20,000, you still have $10,000 left over. then and you have other staff that you can make,
Right.
then that's a reasonable salary.
Right.
That other $10,000 isn't subject to self-employment tax.
Which is correct, but what many people do when they have an S corp is they kind of forget to pay themselves
Yep.
on a W-2, and so the IRS is auditing that, and we certainly don't want somebody to get audited over something like that. So, if the important thing, if you do a partnership and it's not a limited liability partnership, so that your assets are protected, that I would definitely go to an 1120S. But I will tell you, it's like 6 of one, half dozen of the other. But if you have staff and on the whole net profit, like Chris was saying, you would have had to pay FICA. If you have staff on an 1120S, if you take a reasonable salary, whatever else is left over after that reasonable salary, you'd save the FICA. So that's when the 1120S comes into effect and is very beneficial.
Right. And what about being an 1120? A C corp.
Well, that's something you if it's a small business like this, becoming an 1120 is a C corp, and the minimum tax on a C corp is how much?
21%.
21%, right?
Yep.
And if there's a net profit, let's say of $20,000 a piece, and you're only in the 10% bracket, you're actually paying an extra 11%. Being a C corp and double taxation, you're paying an extra 11% in taxes for the C corp. If you moved it to an S corp, it would flow to your personal return, and you pay 10%. So many people with C corps are way overpaying their taxes.
Right.
Yeah.
So you really got to look at the taxation of it, like you're doing. I mean, I would
just
definitely.
Because you've been a C corp for 1,000 years, I know this is a new business, but I don't care if you're listening and you've been a C corp for 1,000 years, and you have a fiscal year, and your fiscal year is in July, and so it would take some undoing to unravel it. Many of you would find out that you would save thousands and thousands and thousands and thousands of dollars in taxes by moving to a Subchapter S.
Yeah, absolutely. Absolutely. And,
Okay,
And,
what else
and
we
it's really
got?
important to have that protection from a corporation or a LLC. If not, make sure you at least get some business insurance, right?
Right.
Gordon, we did Gordon. How about Corey from Blaisdell? Last year in January, we gave birth to my daughter. My husband is self-employed and had a pretty tough year. I don't think he cleared around $10,000. I was on family leave and got $3,500, and then went back to work in September and made about $8,000. We have 2 other children who live with us this year. We can claim them. Last year, their dad claimed them. What should we watch out for when filing our return? Well, so that's unraveling some spaghetti.
Yeah, well, it sounds like, first of all, they'd be entitled to the stimulus
Well, they would get the stimulus for the 2 other
For
children.
for this year,
And they would get
for the 3 children.
Yeah, they have.
the 3 children. And they would get the child tax credit for all
Right.
3, the full child tax credit for all 3.
Right.
Which is crazy because probably the dad who claimed them last year could have gotten some of the advance, and he just gets to walk away free
Right.
and
Well,
clear.
this year you find out that they are just opening up the storehouses and throwing money at people because it doesn't make any difference if they shouldn't get it. They let them get it if their income is low enough.
Right. And they're going to be entitled to earned income credit.
Right. So, and then they got the EIC on the federal and the state. So this family should be pretty happy with their windfall.
This family may end up with about $27,000 in refunds
Yep.
Yep.
between the
3,500.
stimuluses, the child tax credit,
Yep.
and the earned income credit.
So you want to make sure that bank account number is correct and your routing number is correct, because you don't want this held up.
Yeah, what you should watch out for is make sure you look for the form that Chris is talking about, the advanced child tax credit that you got, and file as soon as you can.
Well, you know, they didn't get
They
the
didn't get
advanced
it.
child
For the two-
tax
for the
credit
2
because Dad
kids.
had them last year.
Right. I thought
Right?
there was a third kid.
And there was
that
no
was
baby.
just born.
Oh, that was just born, the brand
Yeah.
new baby. Yep.
Yeah.
So
Yeah,
they're not.
lots of money.
Yeah.
Lots of money.
Yep. Yep.
All right, what do we
absolutely.
have here? Do we have time before the break?
I could read the question. Tax lady, I'm on Social Security disability, and I'm single. I have a 5-year-old child who lives with me, but I allow her dad to claim her since I don't have to file. Her dad needs a deduction since he makes a lot of money. I don't know what to do this year, but I'm sure he makes over $200,000. I'm not sure if I said that. Anything for me in this advantage? Should I keep doing what I've always done?
Okay, well, this is one of those situations where if she lets the dad claim the kid, he makes so much money, he's not going to be getting that $3,600 credit, right?
Right.
Right. He'll
Because
only
he
get
would
the
be,
$2,000.
He'd be knocked down to the $2,000 credit
Yep.
because his income's so high.
Or-
So in this case, even though in the past she let him have it, she let him have the child because he got the $2,000 credit. Now there's a $3,600 credit for people without income. So they, as a family, they'd actually make out, I know they're not married anymore, by $1,600 by allowing her to claim the child as opposed to him.
Yeah, absolutely. So it's a completely different animal this year.
Bag of worms.
Yeah. And so we're going to take a break.
We're going to take a break. I'm Esther Gullius, the tax lady from EG Tax. We'll see you on the other side. Hi, everybody. I'm Esther Gullius, the tax lady. It is tax season, and we want to get you up to speed. So we thought we'd go over emails because we can do more in detail conversation. And so I have Tiffany Fabian, Christopher Fabian in studio with me. Of course, you want to make your appointment as soon as possible. Make sure you get all of your information, though, before you come in, especially if you've got unemployment. Make sure you contact the state of New York to get you your form that says how much you had received in unemployment, because they won't send them to you. You have to either go online and print it, or text them or call them and ask them to mail you the form that says how much unemployment you got. If they don't mail it to you or send it to you, should you ignore it? Not really, because it'll just hold up your return and it'll make you owe penalty and interest. So you want to make sure that you do that.
Right. And I know Frank just played the Shout song, and Bills got a big game this weekend to win the AFC East. So go Bills. Keep rooting them on.
Oh my gosh. I saw a special the other day on this sweet boy in Buffalo who lost the use of his hands. I don't know if he even has hands. And he is an artist, and he draws with his teeth. He puts a pencil in his teeth. And that was on national news, and he just loves the Bills. And it really brought a tear to my eye to see how the kids just love the Buffalo Bills.
Yeah.
And then I saw McDermott the other day was interviewed on a New York television, New York station, and he was saying the fan base in Buffalo is like something he's never seen before. So
You just made me cry.
Go Bills. Okay.
Go Bills. Okay, so we got Ben writes in, tax lady. I am a new pastor. I received a job offer from a church where they said that my pay is $30,000. But they said I won't have to pay any taxes because it's broken down as $5,000 salary and $25,000 housing allowance. I don't understand how I don't pay taxes if I'm getting paid $30,000.
Well, they're wrong. The housing allowance is considered income, and you'd have to pay self-employment on it, minus any expenses that you have as being a pastor. So regrettably, that's like getting information from the guy over the other side of the fence, right? And so I'm glad that he's vetting it out and looking into it, because there's more details that you need to know.
Not really.
Unless you're opting out of Social Security.
Well, let's talk about that. So your wages are subject to FIC because they're called dual status. They're going to have to pay FIC on the wages and income tax on the wages. Well, if all he has is $5,000, he might get an earned income credit on this, and he's going to pay zero taxes because the standard deduction is so. All he's going to have to pay is FIC on the $5,000. On the housing is not taxable, right, Chris?
To income tax.
Right, but it is subject to FICA. So on his $25,000 housing, if he spent it all on housing, then all he has to do is pay FICA on the $25,000, reduced by any non-reimbursed expenses.
Right.
So if he had travel, he's going visiting his congregation in the hospital and all that stuff, he can reduce, and maybe he's got some books that he bought, Bibles and everything. The $25,000 housing, let's say he had $10,000 in unreimbursed expenses, so he has to pay FICA on the $15,000 after he takes backs off the debt.
Right.
But he doesn't have to pay income tax on that. And as a brand new minister, if he conscientiously objects to receiving public benefits such as Social Security when he gets older, he can opt out of Social Security and not have to pay Social Security on anything, but he has to do that in the first year of ordination.
Correct.
Right?
Correct.
Did I do good?
You did good. And definitely save that letter you received, or your form that you opted out, because I've seen pastors 20 years later get letters from the government saying, we don't have it on record, so you have to pay us Social Security tax.
Right.
So you really got to dot your I's and cross your T's.
So understand, the reason you would get an exemption from FICA is that you're saying, when I get old, I don't think that the federal government should support me. I believe that the church should support me. And as a result, I conscientiously object to receiving public benefits. And that's why they would allow you to opt out of Social Security.
Yep.
Yeah.
And if you need help with that, we will help you.
Definitely.
We do lots of pastors' tax returns.
Yes.
We do. I've got Sam from West Seneca. Esther, my daughter is 29, and in 2021 she decided to go to law school and move back home. She had a part-time job during 2021 making $8,900. My question is, can we claim her as a dependent on 2021? We provided more than 50% of her support. We took on her car payment, her food, the list goes on and on.
Well, someday she'll be supporting you. And I think that's lovely that you supported her, but can they take her as a dependent anymore?
No, her income's too high.
Because her income's too high.
Right.
But the daughter's going to make out really good because she'll get earned income credit, right?
Yep.
And
She's 28.
and she pays no taxes, so she'll get an earned income credit on the federal, earned income credit on the state, and she'll be in good shape.
Right. She'll have refunds coming.
And probably she'll get student loan help because her income's so low.
That's right. And loan nerves are on pause until May again, which is great.
Right.
Chris has got a question.
Yep.
Yes.
So we got Charlie. Esther, I just bought my first house. It's a 2-family. My parents said it's the best thing to do because my tenants will pay half of the mortgage, and then I get a nice tax break when I file my return. You have been doing my family's returns for years. Can you explain this to me, or can I make an appointment to meet with you?
Oh, you can always make an appointment, right?
Yeah,
but in simple terms, half of the house that he lives in is considered personal. The other half of the house is investment, rental. He has to make sure that he's doing fair rental value to the tenant, because you have to have a profit motive in order to take all the expenses on that business side of the house. On that personal side of the house, the only thing that's deductible is going to be mortgage interest and property taxes, okay? Unless you do some home improvement for energy conservation and they put that back in the tax law, but right now that's out. On the business side, all of that income you receive is going to be reduced by the expenses of 50% of the homeowners insurance, 50% of the interest, 50% of property taxes, 50% of water bills, 50% of the landscaping, and so on and so forth. And 50% of the cost of the house depreciated over 27 and a half years. So on one side you got a Schedule E, on the other side is your personal home, and your family's right. You're going to get a nice
But I think I was going to say somebody did steer you correctly, and I think it's really good advice. You see a lot of young families and young people who aren't married who get rentals, and it's a really good idea. Usually they have a lot of times a loss, and after many years...
It'll reduce the tax liability on the regular income.
Exactly. After many years, then they can go buy a single house. They can continue to have that double, and it can be part of their retirement portfolio.
Yep.
I think it's a really good idea.
I know our IT guy didn't think he could buy a house. And we said, why don't you buy a double? And he looked at us with like the, deer in a headlight. And we explained to him the first part of this, where the tenant will pay basically 50 to 75% of your mortgage payment.
Right.
So now you can afford a house.
Right.
And after he saw it, he was so excited. He went out and bought a house, a double.
Yep.
Very exciting.
And so it's so great. I mean, it used to be back in the day when I think 30 years ago, when that's what you did when you first got married. You bought yourself a double,
Yep.
because you couldn't afford a single.
Yep.
Because mortgage rates were so high. But now with low mortgage rates, you can actually buy more house for about the same expense that you would have bought before the appreciation with higher interest rates. So,
Yep.
okay, what else we got?
I have Donald from Buffalo, tax lady. I've been messing around with Bitcoin all year, and I've accumulated gains. Oh my gosh, of over $500,000. I think I'm in trouble. Am I?
That guy's in big trouble.
Well, wait.
Wait.
He says accumulated gains. Did he cash them in?
Well, that's true. If it was buy, sell, buy, sell, buy, sell, buy, sell. Right, that's true.
If he cashed them in and has gains, taxable gains of $500,000, he's in trouble. If he didn't sell anything, there's no tax.
Right.
So it's done. If you sold it and you have
Right.
gains,
So, assuming he sold it, those are Schedule D
Mm-hmm.
transactions, and you have to know the cost basis and the difference between what you paid for it and what you sell it for is going to be the gain. Depending upon how long you held it for. So if you held it for more than a year, then the maximum you're going to pay is 20%. But if it's less than a year, you're going to pay at whatever tax bracket you're in. So anybody that's doing Bitcoin, understand that it can be very costly. I know one of my clients cashed in his IRA to do Bitcoin, and he ended up losing money on the Bitcoin, and he lost all of his IRA money, and he had a penalty for being under the age of 59 and a half. So, it's very speculative, and the IRS is looking at all this kind of cryptocurrencies, so you got to be very careful.
right? And you got to look at it too. If you use cryptocurrency as cash and you're buying assets, you're buying a car, you're buying paying your dentist, that counts as income. That's a Schedule C
Schedule C.
transaction, not a Schedule D.
Right.
So then you have to do, you count the income. You may pay self-employment tax too on the income, on the growth of your Bitcoin.
So it depends on what you're doing with the Bitcoin, which is
So
very
anyway,
very-
well, I'm Esther Gullius, the tax lady. Our offices will be open here in the next few days, really 10, 15 days. If you need the best tax help, EG Tax hopes you'll think of us. Tell us your family. You can always call us. Our website is egtax.com. Until next week, go Bills. God bless you guys. Thanks for listening.